Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. You can join Brian Curtis and myself for the stories making news and moving markets in the APAC region. You can subscribe to the show anywhere you get your podcast and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
Let's get to our guest, Joe Deaux, Bloomberg Metals and Mining Reporter, to discuss this a little bit further. This is just yet another obstacle along the way, isn't it, Joe?
Yeah, it really is. I think the market has been so focused on the CFIUS review, the review by the intergovernment agency that determines whether or not a foreign company is okay to buy a domestic company. But our sources today telling us that the administration is looking at the exposure that Nippon has to China, specifically these 9 facilities that they have in China and the 3.6 million tons of capacity that they have. The ability to produce there. So I think that has come up as another thing that investors maybe are probably going to be looking a little bit closer at.
Joe, is this basic steel production when you talk about the facilities in China? Is it, kind of the old school, you melt down the iron ore, you add the coal and the limestone, or is it something that is more contemporary when I'm thinking of recycled steel and metal being put through an electric furnace? Is it the old school approach that's being used in China?
So it's actually neither, and it's good that you're nailing down into this. It's these downstream products, right? It's like bar and pipe and tube. These are things that that end users buy and they put into things like oil, oil pipelines or to roads for like the wire rod. So it's not like traditional raw steelmaking as you think of it. And I think that's another reason that it may raise some eyebrows for folks, right? It's not the kind that a Nucor or US Steel or Cleveland Cliffs has traditionally complained about in the past with trade tariffs, of dumping. But listen, we know how the political climate has been specifically around China for many years now. And for steel, it goes back for the past 20 years, right? That's one of the things that we pointed out in our story. There's a long history intertwined here.
It gets really complicated because we don't know all that much about these 9 sites that Nippon has there in China, although with just what was put in a note to shareholders that these are part of its global output plans. But it also raises a very tricky question of, is it Nippon steel then? Is it Chinese-produced steel? Is the iPhone that's sold elsewhere, is that a China product or is it an Apple product? And, how do we put all this stuff together?
Right. Nippon did get back to us, and they did give us a statement, which I should point out, that they said, our operations in China, including any joint ventures they have with Chinese partners, have no control over their operations or business decisions made outside of China, including in the U.S. So, I think that's an interesting point. I think another interesting point is it's 3.6 million tons of capacity out of the 66 million tons of capacity that Nippon has globally, right? So it's a thin percentage of it. So I think just looking at the numbers, it's not immediately obvious that this is necessarily some sort of threat, but I guess this is why the administration is looking at it, right? They're wanting to look further into it to see if maybe it does pose some sort of threat or is some sort of issue that they should address.
Well, at the same time, I think we have to recognize it is an election year. Donald Trump has already weighed in on this deal, saying that he would scrap it. And I'm sure that the Biden administration or the Biden campaign would very much like the endorsement from the United Steelworkers, right?
Exactly. This boils down to one very big political issue, which is blue-collar workers. The United Steelworkers have made it clear that they do not support Nippon Steel in this deal. The United Steelworkers themselves it's not like they're the big voting bloc, right, that's going to get one or the other over the finish line, but they represent a very important type of voter in the United States, the blue collar industrial worker. They are also in a battleground state, right? Pennsylvania is the headquarters of U.S. Steel. This is a massive state that helped get Biden over the line in 2020. And the steelworkers and many people like them got Trump over the line in 2016. Both of these guys know what's at stake here. And that's obviously why U.S. Steel, being bought by a Japanese company, has been thrust into the center of this political dialogue.
You mentioned that the Nippon Steel output in China from these 9 plants is reasonably small, 3.6 million tons, I think you said, compared to a massive total globally. So is that the type of kind of profile where Nippon Steel would either sell them or dispose of them in some other way in order to get this deal through?
Unclear. I mean, Nippon hasn't said anything about that specifically. I mean, if you dig deep into the weeds of all the different documents that have been put out since the deal was announced, it does mention that, if the company will do what it takes to get this deal closed. I don't know if they'll be willing to sell assets. I mean, that's a question that we really should find out from them, and that they maybe should announce to shareholders. But at this point, it's unclear. And listen, Nippon gave us the statement that they gave us, but it's also not even clear if they've had a conversation with the White House about stuff like this. So there's a lot still going on behind the scenes that I think we just don't know.
Yeah, I'm wondering about, when you mention national security, let's just hypothetically say that there is a scenario where India's Tata Steel were to make a bid for U.S. Steel. Do you think it would get the same level of scrutiny?
I don't know. I think it's U.S. Steel. This is the way I look at it. It's United States Steel Corporation. And the idea that a company that is not American, or any company for that matter, buying United States Steel, I think carries a certain symbolic weight with it. And if you tell a bunch of guys who are living just outside of Pittsburgh that the buyer of a company that they've worked at, their fathers worked at, their grandfathers worked at, and more, it's going to be snapped up by a Japanese company, their reaction probably is like, whoa, okay, wow, how did we get here, right? And so I think even if you said it was a European company, which we've seen, ArcelorMittal bought a lot of American steel mills. I just think it comes with a feeling, right? And a feeling isn't something that we can capture in numbers or something that we can capture in data in the Bloomberg terminal. It is something that we have to capture through stories and telling the voice of those people.
In the old days, it could be political. The Democrats would have supported it, and the Republicans would have supported it, and the Democrats might have rejected it because they're worried about jobs. It's all different now. Everything's completely different. Can we expect similar action on aluminum coming soon?
Well, other companies buying aluminum companies? I don't know. Alcoa's got its own issues right now in Western Australia on their bauxite mines and getting approval and licenses for those that they had they didn't ever expect to have trouble with. I haven't heard talk of that, but listen, everything is up for sale at all times, right? Especially commodities.
And everything's up in the air. And Joe, we appreciate coming in and spending some time with us, even when we don't know, all of these questions and exactly where they're going. Joe Deaux there with us, Bloomberg Metal and Mining Reporter. This is Bloomberg. Fred Neumann joins us here in our studios in Hong Kong, Chief Asia Economist and co-head of Global Research for Asia at HSBC. Fred, thanks very much for coming in. We cover macro conditions a lot on this program, but on a day like today and yesterday, the Fed and interest rates in China, geopolitics, all that sort of gets pushed to the back burner. The earnings from NVIDIA and how it projects to other companies, how does that sit in the overall environment for growth, let's say starting in the U.S.?
Well, it's a reminder that we still have booming sectors. It's not all doom and gloom that you might sometimes think. You have clearly investment needs in the AI space, but we should remember that's very narrowly focused. So if you think about the Asian tech supply chain, for example, it's very specific companies in very specific segments that benefit. If you look at the overall electronic sector, actually it hasn't really lifted just as much. If you look, for example, at global new orders for consumer electronics, they're still down. The smartphone sector, the laptop sector, for example, not really coming up. It's very specific, that AI-related investment. And that's, of course, NVIDIA benefits and other companies in supply chain. But, for broader growth in Asia, for Asian exports, 1/3 of which are electronics, to lift, we need more broader demand to come through.
So I'm going to get a little philosophical here. Broadly speaking, Fred, do you believe artificial intelligence has the potential to create disinflation?
It has potentially, yes, and that's not necessarily all positive. So we know there's more investment coming in. We know there's more servers being installed on the other side, and we still need to see that. To what extent is AI starting to slow down the hiring of workers that would originally have been used in AI, for example, right? Yeah. So that's an open question. I don't know the answer. There's certainly productivity gains. But long-term technology is there. You can't really prevent progress, but sometimes these introduction of new technologies can be quite disruptive for the labor market. And that obviously introduces uncertainties as well as opportunities, and potentially then in the next few years might actually curb wage growth, for example.
Yeah, some of the most dour people I know are economists, Fred, and you're fitting that bill today, highlighting the negatives there.
I wouldn't have become an economist if it wasn't dour. So.
Yeah, exactly. Well, it's good to have a sober mind in our midst because sometimes things run a little crazy. We talked about the huge expansion in NVIDIA's market cap today being 1.5 times Intel. I mean, I still find that very hard to get my head around. But on the positive side, and I think that's what really the market's responding to, is some of those productivity gains, how AI has the potential to change the way we do business. And it's very hard to actually compute that at the moment.
That's right. We don't know yet, but the potential is there. It's absolutely breathtaking. And ultimately, that's what gets even dour economists excited is when you talk about productivity gains. And, that ultimately human prosperity is driven by productivity. And if we have new technology that drives that of course raises the specter over the next 10 years. We might see enormous gains in economic growth driven by the application of AI. And there's other good stuff happening in the world as well. If you look at self-driving cars, if you look at biotechnology, for example, we're not at a standstill. This is not the end of global growth as we know it, because we have these breakthroughs in technology. However, it can be disruptive when it's being introduced, and I think managing those social consequences, making sure that technology is safe, is very important. And I think that's a broader public interest, I think, to make sure that we develop these powerful technologies in the safest way possible.
I was looking at a story just now in the Bloomberg Terminal. A money manager at Fidelity International has sold the vast majority of his holdings in U.S. Treasuries from the funds that he oversees because he believes that the economy still has a lot of room to grow. I think he's primarily thinking here of the U.S., but when you think about where we're headed in the rates environment right now, we had at least 4 Fed officials today urging patience when you start to talk about rate cuts. Where are you right now in terms of growth vis-a-vis Fed rate cuts?
Well, we've said for quite some time it's the Fed may ease, but it may be a much more shallow easing cycle than the market had expected even a few weeks ago. And if you look at growth in the U.S., it looks like it's going down perhaps to trend, but that's still pretty strong growth overall. We would point out, for example, not only were the data overnight pretty strong, initial claims down again, for example, but also U.S. households are still sitting on very large wealth gains. If you look at what's happening with NVIDIA, with the stock market overall, that's a big tailwind still for U.S. consumption. And so it's not entirely clear that really heading to that hard landing. And whether it's really the all clear on inflation, I think we need to be very careful in this. Fortunately, the market has wound back its expectation. We're now at June instead of March. I think that sounds about right.
That's where you are too, June, right?
We are June as well, yeah. But look, I mean, some when we talk to clients, some people are now asking, could the Fed even hike rates again? It's not entirely inconceivable. It's not our base case.
Maybe slightly more likely is they just don't move this year. What do you think of that probability?
Yeah, it could be as well. I think the right now the data flow suggests less rather than more. And so the more we have, one more month of strong data, one more month of sticky inflation coming in, why would the Fed necessarily rush into rate cuts? So far, things are going well. And then we have the U.S. election coming in as well, and they may not want to move too closely before that as well.
10 seconds. Last question. Did the big gains that we were seeing in the equity market suggest that there is still too much liquidity in the system?
Yeah, well, there is still liquidity in the system, but liquidity is in the eye of the beholder, right? Liquidity is a state of mind. I don't know whether, that's one of my professors said it. It's a state of mind. And the state of mind is bullish right now. So there you go. Yeah. You got liquidity.
But can I sleep well tonight?
You can sleep well. Yes, it's Friday night.
Everything's
so
okay for the moment. Well. Yeah, the weekend approaches. Frederick, thank you very much for being with us. Frederick Neumann, HSBC. This is Bloomberg. Well, a huge trove of documents has turned up at the global security site GitHub, owned by Microsoft. The documents appear to outline China's state-sponsored cyber attacks on foreign governments. Joining us now to discuss this in detail is Sarah Zheng, Bloomberg China Technology Reporter. So there are so many interesting angles to this, Sarah, one of which is that this vendor, iSoon, from which a lot of these files emanated, is just one of many, many different vendors that take part in this alleged program.
Exactly. I think that exact point is why the global cybersecurity community has been so excited about this kind of leak, because it's the first major leak from this type of Chinese cyber vendor. And it gives us a little bit of a glimpse into this broader ecosystem of vendors in China that work with government clients and procure this kind of data potentially from foreign government targets and provides that for the Chinese government.
So from what I'm reading in the Bloomberg piece, the origin of the files are unclear, but experts do believe they are authentic. Have we, or has there been any reaction from Beijing at this point?
So far, there hasn't been. We've had reporters asking the Chinese Foreign Ministry at their regular briefings, and they claim that they're not aware of this, and they say that they oppose all types of cyber attacks. In the past, we've seen the Chinese government be increasingly vocal about how they are actually a victim of Western hacking and deny all state-sponsored hacking. But we are looking to see, as this gains more attention and traction among the named governments and companies in this leak, whether or not the Chinese government will come out with more of an official reaction.
One of the other interesting aspects is the widely diverse targets, the different types of targets that are brought up in some of these files.
Yeah, exactly. So a bunch of colleagues, we were going through hundreds of files, almost 600 files, I think, if I recall. And there are a bunch of different targets named. It's very diverse. A lot of high-profile government targets, including even the NATO Secretary General. We saw the UK Foreign Ministry named, the Royal Thai Army, a bunch of different governments, and including companies as well.
So I'm wondering, when you get away from the relation with Washington, D.C., and you're involving other entities like NATO or even the Thai Army, I mean, they're really, in terms of damage control, there's a lot to push back against.
Definitely. I mean, I think what is interesting is that no one is particularly surprised that governments or state actors are targeting other governments. I mean, I think that's something that's generally understood. But in this case, we are seeing specific details laid out about how these researchers are actually engaging in the targeting, a little bit of information about how much they're selling it for, and just laying out in very clear terms that we are procuring this data and providing it to the government. So something that we already kind of would guess is happening and having it be brought to the fore.
And what are some of the interesting comments that we're hearing from cybersecurity experts who we've contacted to comment on the story?
I think what's interesting is that this is the first major leak of this kind from a cyber vendor that does this kind of attacking. So they are pointing out quite interesting things about what this shows about the operations of this particular vendor and maybe what it reveals about this broader market just for this kind of data inside of China. And there are also, a lot of speculation about the origins of this, what the person who had leaked this data is intending to do, and then potentially what this could mean for the Chinese government. Will they have to answer for it? Will other governments that were named in this leak come out and pressure them as well? So
you talked about visibility into pricing. How expensive or how inexpensive is it for this type of behavior?
It's actually interesting because what experts are saying is that it seems quite inexpensive, especially given the costs that governments and companies, major companies, would put into cybersecurity defenses. Some of these massive databases of personal data were being hawked online, according to these documents, for just tens of thousands of RMB. So a huge price differential there.
So you referred to it as a leak. We actually say in our headline, purported leaks. And I said earlier that it was unclear that maybe this was uncovered by someone, but it seems like it is a leak. And then it's really tricky getting at the motivation, isn't it?
Definitely. And I think that's a good caveat to mention. We have gone through the documents, but we haven't personally been able to verify all of the contents. But from what cybersecurity experts are saying, they say that it aligns with publicly reported information on these types of threat actors. And we had Mandiant, a really big name in cybersecurity, a unit of Google Cloud, coming out and saying that they believe it to be authentic as well.
So the most surprising thing seems to be how inexpensive it is, not the fact that it's going on, right?
Yes, that, and then just the fact that, we're seeing it spelled out in black and white that they have these specific targets, and that this could be sort of the tip of the iceberg for what is actually going on in China and the broader, cyber attack ecosystem.
Well, I suppose for, the Ministry of State Security, with deep pockets, $278,000 is not too much, but that's one of the charges that we saw, at least in one of the stories. Chinese customers getting a trove of information behind social media accounts and platforms like Facebook and Telegram for $250,000, which seems expensive to us, but for governments, maybe not so much. Sarah, thanks very much. Sarah Zheng, this is Bloomberg.
This has been the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.